Greetings. I trust you're all well and keeping safe during these COVID times, which are becoming ever more challenging, especially for those of our borrowers, investors and supporters who are living in Victoria, and we hope that they're managing under the increasing stress. Today I want to talk to you about another upcoming opportunity in Miranda, which is a suburb to the south of Sydney in the Sutherland Shire. Just another word of caution here, as some of you will have noticed, our loans as they hit the platform are going very, very quickly. And in fact, last week in the case of Green Acres, we never even managed to get the loan onto the platform as we received overwhelming interest just from the video. So if you are interested in this loan, please hit the button as quickly as you can once it comes up on the platform. And alternatively, just send us an email and we'll do our best without committing to try and reserve a piece of the loan for you. So I'm just going to share my screen with you and I'm going to take you through the IM for this loan. I hope you enjoy our new IM layout, which we're now demonstrating here for the first time. So as I said earlier, this is a loan in Miranda, and the headlines are very simply, it's for a complex that is being built called Savannah Rose. At a quick glance, the return to investors is 8.15% net. That's off the back of a 65% LVR. The total lend is $6.8 million. Our credit team has assessed this as a B4, which I'll speak about in a little while, and the loan term is 5 to 11 months. So just the headlines for the loan, here is the summary very quickly. So as I said, it's in Miranda. We're refinancing a Latrobe financial construction facility and giving the borrower here an equity release. And we're doing this against a newly built strata townhouse complex, which is 16 complexes located in Miranda. I've redacted the exact address, but if you look carefully in the IM elsewhere, you will see it. As I said earlier, the loan amount is 6.8 million. We actually have a corporate trustee on behalf of a trust as the borrower, and we have the guarantors being the directors and shareholders of those entities. The loan to value ratio excluding GST is 65%. The minimum loan term is 5 months and a maximum loan term of 11 months. Borrowers are paying 8.55% plus a brokerage trail of 0.20%. And investors are earning 8.15% paid monthly in arrear for the first 6 months. And if the borrower elects the rollover, then the balance will be paid on maturity. Should the loan for any reason go into default, and this is unlikely, investors will return 11.15%. Our credit team has given this a score of B4, meaning they consider default to be highly unlikely, and the LVR is in the 65% band. The loan will commence on the 9th of October, so that's in about 3 weeks from now. We need your money by the 7th of October as per normal into our trust account. So just a little bit about the loan. As I said earlier, this is for a complex called Savannah Rose, 16 strata townhouses on 2,500 square meters in Miranda. 4 sales have already been achieved of lots 1, 4, 5, and 16, and they're all either settled or in the process of settling. And this has really confirmed that the market has accepted this product. There is a sales campaign continuing with Highland Property, and they are the largest estate agents in the Sutherland Shire. You can see that we've given you a summary of the townhouses, and you can see as well in the comments that these are really very, very nice high-end units, which should be attractive for both investment and for those people who want to live in them. Miranda is a suburb located around 25 kilometers from the Sydney CBD. It has a huge shopping center there, Westfields Miranda, which is about 350 stores. For those of you who know the area, it's close to Cronulla Beach, it's close to Port Hacking and the Georges River, and also to the Royal National Park. So it's actually very, very well located, and it's a pretty short, about 35 minute train ride into the Sydney CBD. From a funding point of view, we have funded this on a residual stock facility basis to pay out the existing lender and to give equity to the borrower so they can meet planning costs on future projects in both Bankstown and Concord. We've already received 3 expressions of interest for units during October, and once those are settled, this will reduce the exposure to under 65%. So from the get-go, this should be a very comfortable lend. To mitigate the risk, the first 6 months interest is being prepaid, so that's included in our funding table, and post month 6 interest will be taken from the sale proceeds and prepaid for each month, with the balance then reducing the principal. Once the LVR of 60% has been achieved, loan proceeds will be taken on an 80-20 split between ourselves and the developer. We've got a good security package, but before I get to that, just to look at the loan breakup over here, we're giving them net funds of 6.4 million. Legal fees are around $10,000. Our platform fee is 1.75%. There's an arranger fee of 1.1%, and interest in advance, which we spoke about earlier, is $300,000, which makes up the total lend of 6.8. Our security is 12 first mortgages over 12 of the 16 units. These are the remaining 12 units. We have a general security agreement and the usual all-PAP registrations over the borrower. We also have a featherweight security agreement over the shares in the borrower. We have guarantees and indemnities given by the shareholders and directors of the borrower entities. And one of those is the trust, which owns other assets in Concord and Punchbowl. And our security will also extend to those other assets. And the supporting guarantees from the guarantors also entitled us to access assets in Yaguna and Wamberal should this be necessary. As we've pointed out, the maximum LVR is 65%. We have a valuation from Lando Valuers, which was dated around 3 weeks ago. In fact, less than 3 weeks ago, about 10 days ago, where they've assessed the GRV on the individual strata titles as totaling $10.89 million. And we've also made a further adjustment for GST at 7%, which is the minimum payable to the ATO, to reduce the valuation down to $10.5 million. And we've calculated our LVR on the lower figure. I've already mentioned that sales have been achieved, and the agents certainly expect that sales will continue to be achieved. The developer is JPH Urban. They're a very experienced and well-regarded Sydney developer, which has delivered 20 projects over the last 15 years across a reasonable range. There's an example there of projects that have been done in East Hills, in Punchbowl, in Bankstown, and in Yaguna. In addition to that, the guarantors have net assets in excess of $18 million, to which we have access, and there's already an established equity base on this development to cover cost overruns, downturn in property prices, and any unforeseen expenses. So we're quite happy with the financial metrics of this transaction. From an exit point of view, there's a strong primary exit available via the full paydown, has already been demonstrated, and there are multiple secondary exits available, including refinance of the residual debt, refinance against rental income post-settlement of sales, and pay down from the sponsor's own cash resources. So as I've said earlier, our credit team is quite comfortable with this. The normal key conditions apply here. We've received the independent valuation. Obviously, we'll go through the usual DD with the borrower and the guarantors, as well as getting insurance cover. The guarantor is required to get independent legal advice, and our solicitors, K&L Gates, will produce all of the documentation. As per usual, Q&A is provided by CCPA, our external credit consultants, who will have oversight of all aspects of the transaction. And we are very, very comfortable to recommend this transaction for the reasons set out here. Mostly that favorable lending parameters have been achieved with a strong 3 million margin of equity for the lender. The LVR will be reducing as future sales are achieved. 6 months interest has already been prepaid. Future extensions include prepayment of interest for the full term. The developer is incentivized to sell, with sale proceeds split 80-20 when the LVR goes below 60%. There's minimal concentration risk, with 12 individual mortgages being taken against brand new townhouses. Market acceptance has already been demonstrated with the 4 sales achieved to date. There's a sophisticated developer which has good external cash flow and a strong asset base. The security package allows for us to have access to other assets within the group, but beyond the actual security package. There are strong primary and secondary exits, and we have an existing borrower who's displayed exemplary account conduct to date. So we're very comfortable with this from a funding and timing point of view. It's a minimum investment of $100,000. We will need your money by no later than the 7th of October. Just as a reminder, you're going to get 8.15% per annum net, payable monthly in arrears for the first 6 months. And if it goes into default, you're going to get 11.15%. So if you're interested in that loan, please get on the buzzer. Once the loan comes up on the platform, commit to the loan. Alternatively, respond to the email once you see it. As always, feel free to contact Steve Levy or myself, steve@zagga.com.au, alan@zagga.com.au, or call us on 1301 Zagga, and we'll do everything we can to assist. Well, that's all from me on this one. We've had a good run of loans lately, and we have a good few more coming between October and November, so we'll look to keep the platform moving. And thank you to all of our investors who've supported us to date. We really do appreciate it. and we look forward to bringing you more of the same. I'll leave you just by saying, take care, stay well, keep safe, and see you soon. Thank you and goodbye.